Good afternoon. My name is Derek Ventnor, and I'm the Chief Operating Officer for Skate Ontario. This afternoon, over the next 30 to 45 minutes, I'm going to present the audited financial statements for the fiscal year ended June 30th, 2023. We're going to go through the statements, which will basically outline the financial position of Skate Ontario as of June 30th, 2023. And we'll review some highlights of the financial activity of the year, and give an indication of how this bodes for the future for the association from a financial perspective. We are recording this webinar, which has, if you're viewing it on the Skate Ontario website, we will be speaking to these statements at a much higher level, condensed level, during the annual general meeting this coming Saturday. So for those of you who have a chance to view this webinar between now and Saturday and have any questions, by all means, you will have the opportunity to ask those questions on Saturday, or please feel free to contact me at dventnor@skateontario.org. That address can be found on the Skate Ontario website with any of your questions, and I'll make sure I've prepared an answer for you during the audit presentation during the AGM. So we'll get started. The first and most important part of the whole process is literally this paragraph, these first two paragraphs of the auditor's report. So this report is a few pages long before we actually get into the financial statements themselves. And what we're looking for here is an unqualified opinion, which is what this is. And what this basically says in the second paragraph, that in the opinion of the auditors, these statements fairly represent the position of the organization, meaning they've gone through, reviewed our books, reviewed our processes, and are comfortable in providing essentially a guarantee to the organization governance team, which is the board of directors, and to the membership that the financial management of the association is in order, what is being reported is accurate, and that the controls and management processes that we have in place are all sound. A qualified opinion would say something to the effect of the accompanying financial statements present fairly in all materials respects, except for ... Fortunately, we do. Sometimes that happens, and sometimes legitimately. But for Skate Ontario, this past fiscal year, it was an unqualified, clean audit. The next page is just more details for the board of directors and the Skate Ontario Finance Committee, I beg your pardon, that kind of clarifies or delineates exactly the types of things that the auditors are looking for and how they've gone about doing it. The other piece that's most critical out of this auditor's report is that the auditors explain to the readers that what they communicate to those in this language charged with governance. So again, to the board of directors. So what happens is the auditors spend a lot of time with senior management and the finance team. And in this case, senior management is myself. And then they report back to the finance committee and the board. So they've outlined at the start of the audit process, usually late March or in April, we'll have the preliminary meeting with the finance committee and the auditor, where they lay out the audit plan, what's going to be looked at, how it's going to be looked at. And they also then will make a statement through the end of the process, how they've complied with all the legal requirements, the audit standards, and so on. So this is important for the membership to understand that this is all clearly communicated at both ends of the audit process. Now on to the statements. Our first statement is the statement of financial position, otherwise known to many as a balance sheet. What the balance sheet tells us is the financial position on a given specific date and time, not for a period, but a specific date and time in the association's history. And for us, they are now always done. Our fiscal year ends on June 30th of the year. It used to be March 31st a few years ago. And then after some review and consideration of a variety of factors, we changed the fiscal year to end June 30th. So this is what the organization is worth, if you will, its value, financially speaking, as of June 30th. Now, what does this statement say? This is a comparative to the same date 1 year ago, so June 30th of 2022. And you can show where it will show where there's some differences and where in many areas things have stayed pretty flat, which is what you want to see in an organization like ours, with some exceptions, general exceptions, as well as depending on the year just passed. You want to see a lot of consistency, and that's what you do see here. That means that indicates that there's not a lot of bobbing and weaving, a lot of reactive accounting or measures being taken and being in complete reaction mode to what's going on. What these numbers verify is that the accounting processes, the reporting systems, and the reports on a monthly and quarterly basis are all in place to ensure that we aren't seeing massive swings, and that we are keeping regular monitoring in place. And if that's all in place and working properly, you will see statements similar to these with a couple of exceptions that I'll explain. As you can see, what this balance sheet is saying is that as far as cash on hand, liquid cash on hand, at the end of the year, it stayed roughly the same, $895 versus $859. So we have an unwritten rule of having a certain amount of liquid cash always in our operating account as a bare minimum, and that is basically a coverage for 2 to 3 payroll cycles, 2 or 3 months rent, a few of the very basic operating things, so you can always meet your monthly obligations without being in a panic on cash flow. That will vary throughout the year. As you can imagine, liquid cash in the operating account at the high peak of event season, for example, there's a lot more sitting in that operating account, but there's a lot of daily activity when we're bringing registrations in for events and paying expenses out for events. What adds to that, another example of that to a less degree, is the peak seasons. So it's generally in the spring and then in the fall of NCCP training, where there's a lot of daily transaction activity. What this says, over the course of the year, it's been pretty stable. I will talk about the balance in the investments a couple times throughout this presentation. As you can see here, year over year, we're about between $500,000 and $600,000 to the good, more invested in our investment portfolio as of June 30th. That is largely a timing issue on any given point with how much is in that portfolio. We are in a very good position where it's very seldom anymore that we have to dig into that portfolio for cash flow. It does happen at times, usually in the summer. If it happens in the summer, in that because you got a bit of a spell potentially where events haven't really started rolling up, which is a big cash inflow. However, monthly expenses, as well as finishing off some of the previous year's programs, you're still paying those bills. From time to time, we will dip into the reserve for a cash flow, and then I'll put it back, and then some 2 to 3 months later. This year, we did not do any withdrawals, and we were able to put in one significant deposit in March, mid-March, and we didn't have to draw that down for cash flow purposes prior to June 30th, and therefore we have a significant increase in the balance of the investment account, which is a very positive thing. As you're all aware, the investment portfolios, depending on how you invest, can be very volatile. Ours is quite conservative, which I'll speak to a little later in the notes. But it's a very good position for the association to be in, to have over $3 million in that portfolio at any given time. It's also important to note that a lot of that is relatively easy to access when needed. So what I mean by that, we don't have several $100,000 or millions of this 3 million tied up in funds that we can't access if we need it. AR is pretty plain Jane, and that primarily represents at June 30th the April to June transfer of registration from Skate Canada, which I'll talk about more in the income statement or the statement of operations section of this presentation. And as of June 30th, we know what is coming to us for that quarter. However, it's not remitted from Skate Canada till into the next quarter, which is absolutely normal business practice. No issues there. And actually that whole system has improved over the last 2 years, in that they're now doing those calculations and remittances on a quarterly basis. So this is very good. Prepaids is up. This is the first example of 2023 being, if not completely, then very, very close back to a normal operating year, as opposed to a COVID era operating year. And you're going to find I make those comments 2 or 3 times this afternoon. So this is the first example where it was 54 a year ago. Now we're at $125,000, 126. The reason for that is we were in a position at this time where the team was able to secure more contracts for hotels and facilities for events that were going to happen in the summer, and also primarily for venues for NCCP clinics that would happen after June 30th, but we were able to secure and to put down deposits on those locations to a much greater extent this year than a year ago. A year ago, we were just barely crawling out of kind of the COVID pandemic. It certainly had slowed down by June, but we weren't out of it. And facilities were still being very, very close to the line of how far ahead they would accept deposits and pre-bookings, until regular course of business had become even more settled and they had better understanding of demands and possible impacts of any other restrictions or shutdowns. So it's just the first indicator that we've come out of the pandemic and back to a normal operation. Capital assets, we'll talk about those in the notes, but that is basically physical equipment. The majority of it tied to events. The other piece of it, office equipment, furniture, and furnishings that are here at our head office here in Mississauga. Other than that, we do not hold capital assets. We don't hold property. We don't have vehicles or anything like that. It's primarily event scoring and streaming equipment, and then office furniture, office computers, all that kind of fun stuff. On the liability side, part of the balance sheet or statement of position, there's only one kind of material change, 2, I guess, from last year. Deferred revenue is the same. I will speak to the tax liability near the end of the presentation. The deferred revenue is significantly changed from last year materially. It's about $50,000 different. A large piece of that, at 22, we had a significant amount of deferred revenue being recorded as the last part of the Ontario Trillium Foundation grant that then we carried into revenue for fiscal 22-23. Whereas there is no deferred Trillium grant as of June 30th, 2023, because that grant has now been fully utilized and been fully executed, and the file is now closed. What represents deferred revenue is primarily 2 things. Entry fees collected as of June 30th for the July and August sectional series events. So those are entry fees collected before the events, before July 1st. So, but they're for events that will occur subsequent to the end of the fiscal year. And the same is true as for some NCCP or coaching clinic activity that was scheduled and did happen post July 1st, 2023. So that's what that deferred revenue is. So that will now come forward, and it will be part of the 23-24 actual revenue in the next set of statements. The CEBA loan is still in place. You'll see it as a current liability as opposed to a separate line down below where it was last year. And the reason is it was reclassed to current from long-term through the audit process because it will be repaid and clear our books in December of 2023. For those of you who aren't familiar, CEBA was one of the federal support programs throughout the COVID period. And what basically happens is organizations such as ours had these loans available to them with a long-term non-interest loan period. If they're repaid by a certain date in full, then a certain amount is forgivable and will be counted as revenue. So what will happen in Skate Ontario's case is we will pay back $40,000 in the month of December. It's due December 31st. So we'll pay that down before the holiday season, and then we will retain $20,000 that will then be recorded as revenue for the 23-24 fiscal year, as that's when it was realized. So that and then this will essentially come off the books a year from now. Our net assets as the final section of the balance sheet. As you can see, almost all of it is in unrestricted assets, which means the board has not taken any action, nor do we need to, certainly at this time, to put in breakdown into specific funds. So these funds are only allowed to be used for this purpose only, unless otherwise determined by the board. We have not set up any restricted funds for several reasons, and it's fortunate that we're in a position to be able to do that. Unrestricted does not mean not invested. Those are two very different things. So as we looked at the top of the balance sheet, most of that 3.8 is in our funds, in our investments, tied up, if you will, in the investments. It's not all sitting in the bank for us available to write a big old check. However, there's no real limits other than normal accounting standards on how that money can be used. It's at the discretion of the board and the senior management team within the budget process. The 152, you'll note, equals the 152 up here. They balance each other out. And that's, again, in our equity section of what we've got in capital assets. Physical, tangible equipment. Moving on to the statement of operations, otherwise known as the income statement. There's some things to highlight here, and this is where you can really see 2023, for all intents and purposes, is either very close to, right back to, in some areas exceeding the pre-pandemic era. So we consider, for our purposes, the 18-19 year, actually 1920 year, as the last pre-pandemic year, as most of you will, for all material purposes, because as you may recall, the world basically shut down in March of 2020. We got through most of our operating year. There was only a small number of the provincial championships and maybe one or two other small end of year events that we could not execute because of the shutdowns in March of 20. And then, of course, that was also the transition year between fiscal year date changes. So now we've gone through 2021, 21, 22 were truly fully impacted through the entire cycle by COVID. And then 2023, very, very early days of 23, still a certain amount of uncertainty about what was coming, but we were showing signs, the royal we, not just Skate Ontario, but the entire environment was showing signs of exiting the pandemic, and then things just ramped up from there. Some of these figures tell that story. So, for example, the events registration revenue. So you may know that we have 5 different types or series of events: sectional, provincial, synchro, star 1 to 4, and then this year, Bring on the Fun. All of various degrees of activity and entry level and all that kind of fun stuff. This year, we brought in $2.1 million in entry fees, which far exceeded, or I shouldn't say, it certainly exceeded what we expected in our budgeting process, because we just didn't know how events were going to bounce back. We just didn't know in 22, 23. But they came back by and large far, far better than we anticipated. Whereas the year before, you can see we're under $1 million in entry fees. That is a true reflection of the number of events that we were to operate in fiscal 22 because of rolling or variable shutdowns. We were open for a bit, then we'd close. We were open for a bit, then we'd close. And we even had in Ontario, we had a significant back to shutdown through late January and February of 2022. So that had a huge impact on events. And we didn't deal with any of that. We didn't have to face any of that this past fiscal. So that's one indicator of we're really operating now in a post-pandemic era. Registration fees, as I briefly mentioned earlier, this represents the transfer from Skate Canada down to the section. So as you're all aware, that Skate Canada collects a registration fee on every participant across the country. And then a percentage is then sent down to the section. And this is true of all the sections across the country. The athlete, well, we'll put it a different way. There's 3 forms of Skate Canada transfer, all of which are included in here, this registration figure. A percentage of the coach registration fee, a percentage of test fees, and then 50%. This statement will reflect a 50% of the Skate Canada per head per registrant fee that is collected. So for the year that just ended, it was $40. 20 comes to Skate Canada, 20 is shifted to Skate Ontario. In the coaching fees, it's 30% of the 20% of the coaching fee. They collect X from each coach. Skate Canada keeps 80, we get 20. And then on the test day fees, I believe the fees are still $12 or $13 per test that's submitted to Skate Canada. Then they transfer 20% down to the section. All of that wraps up into this registration fee. As you can see, it was better than last year. You may recall that we exceeded last year. We exceeded our budget. We exceeded our expectations because the rebound was starting to be faster than we had anticipated, which was great for everybody. Great for Skate Canada, great for Skate Ontario, great for all the clubs. That rebound was and continues to be primarily at the can skate level, where those numbers have just exploded coming out of the pandemic. And in some cases where the clubs are having capacity issues to meet the demand. The demand is very high, which is good news for the sport, good news for all the organizations involved. Again, those registrations continue to increase and continue to expand this past fiscal year. Now, we don't know. We don't know for sure. Have we now finally hit the peak? And are we going to roll back a bit? Is it going to continue to grow? We don't know. What we do know is that these last 2 years of these registration figures were based on, or primarily driven, or certainly extremely driven by pent-up demand, meaning, a lot of families who would have put their kids in skating through 2021 and 22 couldn't do it because there was no programs to be had, because there was no arenas open in Ontario in large large swaths. Where now we've seen that pent-up demand, there's been a huge demand for parents to get their kids out, get them involved in sport, and skating has definitely been a beneficiary of that. So what we have done for the coming year, just to give you some insight of what we're trying to predict, although it's a little bit of, stick your finger in the air and see which way the wind is blowing. I beg your pardon, Skate Canada and Skate Ontario have both chosen to predict that there will be a slight retraction, a slight decrease, that we've hit that pent-up peak and now things might return a little bit more normal, or what we define as normal as far as registration. Too soon to tell where we're going to be at for this fiscal. The real benchmark is actually, we don't know until the December 31st numbers are in. We'll get an indication in October based on September numbers, which will be the end of the next fiscal quarter. And as you know, depending on your club, depending on the area, depending on the programs, there's a certain amount of registration that would have come in through August and September, certainly for the fall and to a large degree winter programs. And then though, there's another huge piece of the annual registration will come in that October-December period, at which point is reported and analyzed through the month of January. So we won't have a really solid idea of what 23-24 looks like for another 3-4 months. All the trending, generally speaking, is positive. However, within that some of you I'm sure are aware of, this is overall gross numbers, or the full number, again, largely being driven by CanSkate. We also are aware there are some gaps, and those gaps are becoming a little more clear as a result of the pandemic. So in some of the pre-novice, novice, junior cat areas, there's a cohort, if you will, of athletes that we lost during the pandemic. They were at level X in March of 2020. They were taken off the ice for 2 years, by and large. And in that 2-year period, they went and found other things to do, and they have not come back to skating. That is going to have an impact, we all agree, on a competitive stream of our sport, probably for a while to come. It's still too early to determine exactly how big that gap is, or that cohort is. That is something we're watching very closely. But as we have only executed the first 2 sectional series events as of today, September 20th, with the July and the August sectional events, it's too early to tell just yet the trending on how many people are engaging in competition post-pandemic. So to be seen. I will also, the last point I'll make on this 1.8 is also roughly $200,000 higher than our peak amount in 18-19, certainly since amalgamation, which was the 2016-2017 year was the last fiscal year of pre-amalgamation. 17-18 was the first full fiscal year of the amalgamated Skate Ontario. And 18-19 or 19-20, the high point, 19-20, I beg your pardon, of registration was 1.6 mil. Where this past year actually exceeded our record, and I believe that of Skate Canada as well across the nation. I can't tell you the numbers at Skate Canada, but national numbers, but it was just, the demand just shot way up. Very positive. Now, how accurate is our estimating on a bit of retraction, and time will tell. Education and sponsorship and fundraising for Skate Ontario at this time still is primarily the annual promo contest, where the club sell draw tickets, and we give away the car and several other prizes. We this year are now investing into a significantly upgraded sponsorship program. We are continuing with the promo contest for sure. Now this is gross revenue, not net, I must point out, on the contest. And we're hoping to bring in, now that we've We're developing new programs. We started last year, building the infrastructure, and over the next 2 years, I expect that if we're successful, this sponsorship number is going to increase significantly into our revenue, which will allow us to invest more back into some other programs. Education and training is a combination of both coach education and officials education. Now, on the official side, there's not a lot of revenue here because a lot of the officials development clinics and opportunities, we don't charge a fee. Some we did, but not very many. It's primarily NCCP clinic fees and a little bit of additional specialized seminars that don't fall into other areas. But most of this athlete seminar work would fall, and fees that are collected would fall under sport development, as well as some athlete assessment fees. The miscellaneous was some adjustments that were made from a previous program that then were collected. So this will be a one-off where it's over $100,000. That's very rare, and we don't like to see big numbers in miscellaneous. They should all be directed, but given the activity this past year, that was the best classification for it. So it was some cleaning up some old programs and some stuff that was kind of carrying on or carried over from the previous was all reconciled and finalized the latter part of the 23 fiscal year. The investment area is another area of huge swing, partially impacted by the pandemic. Others will argue significantly. It's how you read and analyze what's happened in the markets in recent months. Last year, we had a very significant loss, mostly unrealized, which I'll explain in the notes. But it was a $230,000 loss in 22, again, primarily unrealized. Whereas this year, the recorded income is $130K. And just a note I'd like to make there, part of our budgeting process and determining how much money we have to spend for a given year, we do not account for either any investment income or loss. We assume flat over the long term. So maybe not in any one given year, but over the longer term, if our investment portfolio is managed properly, which thus far I must say we've done a very, very good job with the folks that we've had working with us, both from a board level and our investment managers. The overall portfolio has performed very well since amalgamation. But you never know exactly what's going to happen. And you're all aware that volatility even now is still somewhat volatile in certain areas. So we don't count on that we're going to bring in 50K or 100K to offset an expense. At the same time, we don't assume we're going to lose money either. So over the long term, it's a net boost, a net income to the association in any given year. It could be a significant income or a significant loss. And these last 2 years together represent exactly that. Our investment portfolio is quite conservative, so the risk has been mitigated significantly. We're not taking a lot of risk at all. We're not into risky ventures or risky markets. It's quite conservative, and some of the returns are noted in the notes. On the expense side, the sport, I'm going to jump around a little bit. I'm going to skip the employee and contractual personnel for just a moment. Then I will come back to that. The other operations and programs, this is primarily anything right now that does not go under sport. There's events, and then there's everything else. You're going to see a continued investment in this other operational program. Those are things that include our live streaming and digital development, which many of you will be aware we're growing more and more every year. Our support services to the club on the governance club management side. So things that Kate McNeil and her portfolio are doing to support the clubs, that falls under this area of operational program support, as well as almost all overhead falls into that. So under sport development, those expenses relate to, and you'll see it's largely an investment. There's not a lot of sport development income, but there's a significant investment. That is direct athlete assistance, funding assistance. That is funding to targeted athletes who meet certain criteria in support of international travel. And then there's a lot of development, athlete development and coach development seminars that are offered that throughout the year to different levels of athlete across the board, as well as finally the Can Skate Excellence Program would fall under that as well, which, as many of you are aware, we're really putting a lot of effort into expanding and supporting the clubs at that level. So those are the things that fall under sport dev. Events is obvious, and you can see that, well, events brings in at a gross level $2.1 million. We also push out on the expense side 1.8. So it's definitely a positive income generator, no question. But it's not the cash king that some believe it is. These expenses also, the 1.8 also reflects the transfers of profit share that go to our partner host clubs, and how much they get basically depends on the type of series they are hosting, sectional versus synchro versus so on and so on and so on, and as well how well that individual event did financially, and there's a whole whack of variables that affect that. Now, so what we have this year, pardon me, is a net income of $765,000. That's huge, and it's not normal, and it is not by design. It's really important that the membership understands that. It puts us in a very good position. There's one thing I will go back to now that you've seen the income. I'm going to go back to the balance sheet for just a moment. This is not something we budget for. Sometimes we will budget for a surplus, but certainly not $750,000. So this is not an exercise in vanity or money grubbing by the association to try and build this infinite pot of money. Having a healthy reserve is very important for the organization, but these funds that have generated on the net, there's a few things that we budgeted for that didn't happen, and more to the other side. On the revenue side, there's things that we didn't budget for, especially on the events side. Based on where we ended last year, we didn't budget or assume that we'd have such an explosion in gross revenue on entries. This is a very good sign. The swing, this is a $300,000 swing on investment income or loss year over year. We continued to see an upswing on registration. $300,000 alone is in that 700 just in unanticipated registration, as again we were playing Russian roulette with how much to try and estimate reasonably would come in, and our estimates on purpose were very conservative. We are also very responsible on the expense side, and you may recall I mentioned earlier, we don't have a good bead where I'm comfortable making solid year-end projections until at least the December 31st numbers, till we got a handle on exactly where, or a reasonable handle on where we think registration is going to end at the end of the year. And also, do we have a good handle on by that time what a lot of the events are likely to do? As you'll recall, many of them are not executed by the end of December. High event season is through January and February. You never really know where you're going to end up financially until the event is over. So all of those factors make it more challenging to try and optimize the net results. So you certainly don't want this to be negative. A year before, prior to accounting for some specific COVID federal assistance, we had an operating loss. Especially in a COVID era, you'd expect that. Our losses were not nearly what they could have been and not nearly what they were for some other organizations within our sector. So this is really important. It is a healthy profit and to a degree unexpected. However, this will certainly not be an annual thing. And I can also tell you that for the year, based on the information that we had in April, the budget that we've prepared for the year that we are now in, the 23-24 year, is flat. So we've budgeted for no net income and no net loss. Whereas we're feeling very comfortable because we're more each passing month, we're getting farther and farther away from the effects of the pandemic. So hopefully this will be a positive number at all, if anything at all, a year from now, but it won't be $750,000. And this building back the reserve is going to allow us to consider additional investments in certain areas into the future, into the next 2-3 years ahead. Now, on that note, now that we're out of the pandemic, I'm going to quickly go back to the statement of financial position for just a moment. What this statement also says is the organization is basically worth $3.9, almost $4 million as of June 30th. What we need to do, and part of what we'll be doing now that we're out of the pandemic and we feel much more comfortable in our ability to estimate in most areas, that we're going to quote unquote, draw a line in the sand or plant our flag on what a standing reserve should be. And when I say we're going to do that, the finance committee and I are going to do some work on that, and then the board will approve a reserve policy by the end of the fiscal year that will state something to the effect of it is the policy of Skate Ontario to always have an unrestricted reserve of X. Now, what should X be? And everybody you ask will have a different opinion, but we're going to work through what that should be, and then our budgeting will always work to either at minimum maintain that level once we hit it. It will also incorporate, some years it would incorporate a surplus for a special purpose. Other years, it will incorporate the budgeting process, a drawdown of the reserve, assuming it doesn't take it down below a certain threshold, to add for additional investment in programs or whatever may come up in the future. So this gives us, the board of directors and the organization, much more flexibility to be able to execute strong programs and take advantage of unique opportunities when they come up. This reserve, again, we have not set what that number will be. It will be set in policy, and then it will be evaluated by the auditors a year from now. So we will be reporting on that in the future, but that is the next step in the evolution of our overall financial management strategy, and to ensure sustainability and viability of the association, regardless of what comes down the road. Statement of changes in assets. I beg your pardon. There's not a lot of information in here. It basically is another way of reporting the change of the assets going through. So basically, you can see year over year we're 800,000 into the unrestricted assets, which basically I'm rounding, but there are 700,000, which basically reflects the net income has increased this, because there's only been a $30,000 net balance change in the assets positively, meaning it's increased. And then the net income has all been invested back into the equity. It's sitting right there. Statement of cash flows. The key thing that you want to see on this, pardon me, is that the bottom number here equals the number in the cash account on the balance sheet. And this basically represents, in major areas, the major sectors of our system, where cash flow has flowed in and out and on a year-over-year basis. All right. So again, here's the access, the input of the net surplus, some net drawdowns in certain areas, and so on and so forth. It shows the cash physically back out into the investment, bringing that value back up to 3.8 million. And at the end of the day, everything balances out. There's not a lot of meaningful information for the membership in general in here, but for those of us that kind of get into trying to figure out where exactly is the cash flowing, that's different than where is the money going, but how is the cash flowing to make sure that we never find ourselves short. This is important. Now, there's a lot of information in the notes. A lot of it is audit standard boilerplate. And that's not to say that it's not important, but it doesn't change very, very much at all year over year over year, unless there's changes to any of the applicable acts, whether it's the Income Tax Act, which has very little impact on Skate Ontario as a not-for-profit or a nonprofit. But there's other accounting standards and things like that. If they change, then the notes would be changed to reflect that. Or if we made any significant changes in our accounting policies or accounting procedures, those would also be highlighted in the notes. That's a requirement. First page is boilerplate, as is the second. This talks about our amortization, or how we write down our assets. The financial instruments essentially talk about the tools we use to manage our money. Including is financial or related party financial instruments. One of the things that has become more of a topic in an audit such as ours, not specifically Skate Ontario, but in our sector, is more focus on related party transactions. The short version of that is we don't have any, which is very, very good. So that's one of the things that keeps our audit very clean. Note number 2 talks about, it's just a chart that shows the areas of risk. It doesn't say there is risk. It says these are the areas that are looked at and considered while the auditors are conducting the audit, what they're testing, what they're looking for. These are and where there's risk if something is gone offside. So if we didn't have, a credit risk is improper cash management. A credit risk is poor management of AR, of accounts receivable, collecting our money. That's where the risk comes in. These do not indicate the auditors flagged all these areas of, good Lord, they're in trouble here. It just shows what they're looking at. What this basically says is that these are the areas within our statements, and the key areas where there's material amounts within those risk areas. Again, not that they've identified you better tighten up. They've identified if something went awry, this is where the risk is. So, and as you can take these numbers right from the balance sheet, the value in the investments, the value that we have not yet collected as of June 30th, and the cash in the account. So the risk is, being somewhat facetious, 2 of us collude and run off with the $900,000 cash. That's the risk. We have the proper internal controls in place to mitigate that risk to normal and beyond normal standard. Liquidity risk, it means if we're ever called out on the full amount of payable and accrued liabilities, or when they come due even, not necessarily called out, do we have the ability to pay our bills? So that's the liquidity risk. That's the assessment. The answer is yes, I do. We currently owe on paper what we've estimated. The loan is firm. This is an estimate, $628,000. Do we have that? If it came down that we had to pay all that out today, do we have those funds available? Yes, we do. This goes on. This is pretty standard language about the risk involved within the nature of our portfolio. Note 3 gives a breakdown of the major categories of the 3.4 million that's in the investment portfolio and the areas that it's invested. So a cash within the portfolio is always very low. It's a bit of a float, and that's probably the lowest it's been in a long, long time, which keeps us totally on side within our finance policy and our investment policy, I should say. GICs, a lot of the investment is there, and there's notes here about the periods over which they will mature, at which time, as they mature, we make decisions then as to how to reinvest them. Other GSCs, or at that point in time, are there other tools available to us, other vehicles available to us that will likely net a greater return on the long term? And we consider that, and myself and the Skate Ontario Treasurer meet with our investment managers on a quarterly basis and are reviewing the portfolio for every quarter, making sure that we're in line with our investment policy, and also that we're constant, at least quarterly, reviewing our cash flow needs to make sure we never get caught short. That's very important. It's a very unpleasant day when you've got a bunch of bills to pay, and all of a sudden you realize there's nothing in the checking account. It's not a good day, and we've never experienced that here at Skate Ontario, fortunately. Capital assets, again, there's three things that are classed in this, two of them tangible, those being the office equipment and furniture, the other being the event equipment. And then finally, what I haven't spoken to yet is the leasehold improvements. You may recall from last year is when it first appeared in our statements because of the major renovation that we did here at the office. When our lease came up, we had a couple of choices: move, renew with the exact same configuration, or renovate with the agreement and negotiation with the landlord. The end result that we decided on for several reasons is that we would do a renovation within the property, within the suite, based on what we were able to negotiate with the landlord. So that those expenses now are amortized over the period of the lease. They're not all eaten in 1 year. It's amortized just like an investment into a vehicle. Different calculation, but same principle. Deferred revenue, again, I spoke to the Trillium Fund earlier in the presentation, and it is now cleared as that file is now closed. The only commitment that we have at this time, notwithstanding the tax estimate, is our lease. So we entered a 10-year lease with a 5-year option to renew at that time. Those are the current terms of the lease, and the amortization will be over that 15-year period. This is the commitment note that is required. This will likely be the last year. We see note 8, which became a standard through calendar 2020 and 2021. I say calendar because that's when it come down from the legislative bodies for accounting and all that fun stuff, as well as the federal government and Revenue Canada, how we would report in our financial statements all the support that was coming at the time from the federal government through the pandemic, where the Canada Emergency Wage Subsidy, or CEWS, much less in that last fiscal year, and then nothing this year as that program was wound down. And then that was federal. And the funding to community sport clubs, that was a provincial program from the government of Ontario. This 67,000 was the administrative portion of that Skate Ontario kept. It was a total of just over $700,000 well, actually 670, the holdback was 10%. So we'll call it $675,000 that came from the government. That was a straight flow through to the clubs, which is exactly what this note speaks to here. And many of you would have been your club would have been recipients of those grants. And then finally, what I'll speak to briefly is we are in the process of finalizing some filings. It's a result of some reviews through an auditor, not a CRA auditor, but our own auditor, as well as some outside accounting tax specialists on HST. And that should be finally resolved, hopefully, this fiscal year. Our last advice was it will probably be resolved within the next hopefully 9 months. So I'm hoping that will all be cleared before we have to present next year's audit. There's no real risk. We continuously update the board of directors on the status of that file. As if not more importantly, both the outside tax specialists that we're using and our auditors feel that the risk that has been communicated and the amounts that are estimated that are being included in our financial statements are accurate and or at minimum they're reasonable. So we're in good position. So at the end of the day, Skate Ontario is ending the fiscal year in a very, very healthy position. This will provide us the ability to carry forward with many of our programs, not only carry forward, but expand them and continue to innovate and do new things that will support athletes, coaches, officials, and our clubs to sustain and help the clubs continue. Some are still rebounding out of the pandemic. So to assist with those and also grow the sport in different areas. So from a financial perspective, we are in a very, very strong position. And I would suggest to the members that you can take comfort that the governing body is not subject to a lot of outside forces right now, and that we are in very good stead for the future. Thank you for taking the time to review this presentation, and I look forward to any questions that you may have either prior to or during the annual meeting. And I remind everyone that the annual meeting will start at 9:30 a.m. this Saturday, September 23rd at 9:30 a.m. If you have not yet confirmed your registration and confirmed your login information to log into both the meeting and the voting platform, please contact us immediately to get that set up, as you will not be able to do that the morning of. So the contact, if you have not been able to register for the annual meeting this Saturday and you still intend to do so, please contact Emma Toman at etoman, Toman, at skateontario.org, reaching out with which club you represent. She will go through a couple of things with you via email and get you all set up once we verify your credentials. Once again, thank you very much for viewing this webinar, and I'd be happy to answer any questions either at the meeting or any time that a member would like to either send me an email or give me a call. I'd be happy to discuss with you. Thank you. Have a good day.